In the name of Allah, the most gracious, the most merciful. Index funds have become a staple of modern investing, providing a straightforward approach to get broad market exposure. However, for Muslim investors, the question arises, are index funds permissible? In this essay, we will look at the fundamentals of Islamic finance, index funds, and if they comply with halal investment requirements. Understanding Islamic finance principle. Sharia law governs Islamic finance and is based on the Quran and the Sunnah, the Prophet Muhammad's actions. Two essential principles applicable to investments are prohibition of riba interest. Sharia law prohibits riba, which is the charging of interest on loans. This is mentioned in the Quran in several places, including Quran 2:75-79. Avoidance of Gharar. Uncertainty. Investment should not involve excessive uncertainty or speculation. This principle ensures that all parties have clear information and understanding of the investment. What are index funds? Index funds are mutual funds or exchange-traded funds (ETFs) that replicate or monitor the components of a financial market index, such as the S&P 500, Nasdaq, or Dow Jones Industrial Average. They intend to offer broad market exposure, low operational costs, and low portfolio turnover. Here's an overview of their main features. Passive management. Unlike actively managed funds, which purchase and sell individual companies, index funds passively monitor a specified index. This signifies that the fund's performance closely matches that of the index it tracks. Diversification. Index funds typically invest in all or a reasonable sample of the securities in the index they track, allowing investors to diversify within that index. Diversification reduces risk by distributing investments across multiple sectors and companies. Lower costs. Index funds often have lower management fees and expense ratios than actively managed funds due to their passive nature. This may make them more appealing to investors seeking to reduce costs. Transparency. Since index funds follow a specific index, investors know exactly which assets are held in the fund at any time, providing greater transparency compared to some other types of funds. Tax efficiency. Index funds typically generate fewer capital gains distributions because they have lower turnover rates. This can make them more tax efficient than many actively managed funds. Are index funds halal? The halal status of index funds depends on several factors. Sharia compliance of underlying assets. Companies featured in the index must adhere to Islam. This involves avoiding firms that engage in haram activities, such as alcohol, gambling, pork products, and interest-based financial services. Financial ratios. The companies must meet certain financial standards, such as having little debt and interest income. These criteria ensure that companies follow Sharia law. Sharia screening. Many halal index funds go through a Sharia screening process, which involves an appointed committee reviewing the fund on a regular basis to verify strict conformity to Islamic rules. Examples of halal index fund. Several index funds and ETFs are explicitly intended to be Sharia compliant. Examples include Wade FTSE USA Sharia ETF Halal, S&P 500 Sharia Industry Exclusions ETF SPAS SP Funds S&P Global REIT Sharia ETF SPOE Wade Dow Jones Islamic World ETF UMMA ETF B Green SRIIT's ETF RETA SP Funds Dow Jones Global Suka ETF SPSK. Conclusion. While not all index funds are halal, Muslim investors can choose from a variety of Sharia-compliant products. By selecting these funds, you can reap the benefits of index investing while remaining true to your religious values. Always make sure that the fund you chose has undergone rigorous Sharia screening and meets the required financial parameters. May Allah SWT guide us to make wise and halal financial decisions, and may He bless our efforts to seek His pleasure in all aspects of our lives. Remember, our wealth is a trust from Allah, and investing it responsibly is a form of worship.